Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature. Now looking at the SEPs, and 1291.75 is the latest print. Had a pretty impressive up day. Today is Wednesday, the 22nd, I believe, day of June, and on this 2011. And as you can see, in looking at our intraday dynamics, taking a quick snapshot, we can see all bullish. Now, having said that, there is a bit of a divergence amongst the indicators, but these are proprietary indicators suggesting to us that green means bullish the market is, and we need to be buying the market. And of course, as you can see on this Tuesday, it was certainly an impressive day as the bullishness actually began to accelerate. Here you have these acceleration moves right there, and extreme moves higher. We'll scroll back just a little bit. Well, maybe we'll just go a little faster than that. And as you can see, actually, on the precursor was on Monday when we actually saw not only an uptrend close near the upper echelon of the day, close near the high of the day in a late session, but we certainly had all bullish indications suggesting the market was likely to move higher. And of course, we'll look at that in a second, but the mother of all key trend following support resistance measures was right below the market. So if you weren't buying the market, or if you weren't avoiding your systems that are selling, or even selling the exposure, the market, then you really need to, if you weren't doing that, you definitely need to be involved with us, because we're going to show you an amazing two-day run that we've seen in our portfolios, probably around upwards of 20% gains in the last 2 days alone on these on this market, or actually on the four markets that our primary portfolios trade: the ES, the mini S&P, the YM, the mini Dow, the mini Russell, the TF, and of course the mini mid-cap, the EMD. But as you can see on yesterday's move, Tuesday, we had that confirmation blast to the upside, which we were really anticipating, and it certainly came to fruition. Look at this beautiful retest of the trend, right back up to the upside. Did have a bit of a hiccup early today, and it's been kind of a slow session, but although we're seeing some divergences, definitely you can see that the market remains bullish to the upside. And that's kind of a snapshot of the intraday as far as a free informational day trade on the ES. Really not seeing it. Look at these choppy moves. You had to move lower, move higher, break below the trend. It's just definitely not one of these days right here where you can really participate and make some nice money. Essentially, it's a choppy to flat market. Why is that? Why is the market flat and choppy? We're going to go ahead and minimize that. And we're actually looking for a chart of the daily market, which we will find right here. So there's the daily market. Why is it so choppy? Well, even though we're not to this key measure of trend following support resistance right here, 1307, which for our intents and purposes really is our fulcrum. Although this, and there you can see the beautiful retest, this is our key measure, mother of all trend following support resistance measures. In fact, it merits a 50% weighting. This measure right here, 1307.74 in blue, merits a 30% weighting. And of course, the short term right here, around 1285, merits a 20% weighting. So, having said that, when these two combine to at least match that, we're going to join these. For instance, if they're bearish, for our intents and purposes, we'll mention we are bearish on the market. And that's actually what happened recently when we went bearish, officially bearish on the market, and mentioned it to you guys in our video newsletter that we were definitely bearish on the market and certainly expected to move down. And that's exactly what we've gotten, and we've gotten a subsequent bounce. Now, having said that, where are we? This formation really should have continued to the upside. This was a very bullish formation. This basing formation and then break to the upside was a very bullish formation on the market, and it actually broke down. So once you have that break, it's really going to suggest that the market is in some trouble. And as you can see, for our intents and purposes, this is a key measure we trade off of which we trade, 1307.74 in blue. And so definitely we'd be looking to sell the market. Actually, I think we got a little bit more to the upside. We did simply retest this swing point, but definitely we'd be selling the market right around here, 1297 to 1307, and covering some shorts there, buying some more stuff, as you heard. And we're going to go ahead and look now. So that's kind of the picture. We're still bearish officially on the market. We're simply retracing this downtrend into this monstrous level of resistance. Now, having said that, in terms of momentum, we have gotten a hard sharp turn higher. These generally can merit some pretty strong snapbacks. The directional movement has just fallen into a fit of neutrality. We're keeping the short-term bearish bias, but certainly the intermediate term has gray status now. But you definitely want to be selling the market. Take this dead cat bounce opportunity to lighten your longer-term exposure, because definitely we do anticipate some lower price movement above 1320, and we'd start to question that view. Certainly above 1340, and we might be more encouraged. But having said that, the market is certainly bearish. If we look quickly at our MRSEM, wow, I mean, can it get any better? It just continues to go straight to the upside. We're going to look at the performance report. Gains after gains after gains since October. There's been almost no drawdown, 65,000. This is after slippage and commissions. $20,000 per single contract. That's not even the detail. We've got another $2,000 right there on the trade. We'll look at the right here. 40 to 60, so we got another $2,000 detailed. So $22,000 since last October. That's November. We'll call it 7 months or so. $22,000 margin is about $5,000. It's a pretty impressive return just for a single system. Now, of course, we mention and recommend that you be diversified amongst all of our trading systems. It's really been the key to our success over the last 8 years, is being able to offer multiple trading models that handle the market differently in different time frames and different markets, essentially. Choppy markets, trending markets, what have you, up markets, down markets, and as you can see, this system handles it quite well. But we definitely recommend it being in concert with other systems to be involved in our portfolio. Actually, we'll go ahead and look right here. We'll say no. And here you go. Beautiful trades. We've mentioned this was our new ESM 30 system. And here we are. We didn't quite catch the rest of this, unfortunately. It did sell, and we're going to look at that right there, not in detailed mode. Well, actually, we're going to look at it in detailed mode. Had a bit of a choppy time of late, but definitely expect that to be eradicated as we bounce back to the upside. Look at this beautiful. This, of course, is after slippage and commissions. $76,000 in just 2.5 years, over $5,700 maximum drawdown. Beautiful, beautiful trading model. As you can see, you combine this with, you combine this with the MRSEM, and or let's say you go to R2K Day Trader 60. We'll pull up that after slippage and commissions. It'll take it a second to calculate. There you see a beautiful $80,000, $7,300. Not quite as good. We're actually looking for, what are we looking for? Oh, actually looking for the Evo. Combine it with the Evo. Kind of had a loser there, but had a winner there. So what an amazing portfolio that would be, combining the MRSEM with the ESM 30 with the Evo, $30,000 over the last 2.5 years. $5,100 is the maximum drawdown. But gets what gets more interesting, shouldn't have the burrito, is the Evo EM. Even much better. $55,000, $6,500 maximum drawdown. Definitely some beautiful trading models to be involved with. So how are the ones that we track? Well, there's, as you can see, the real-time live performance of those portfolios. How have our portfolios been doing? Well, we see right there yesterday, had a pretty good day in the Map Black yesterday. The Map Black is our most diversified portfolio. $100,000, trades about 40 or so lots, if not more. Had just a 5-lot exposure. Now, if it trades 40 lots, it's not going to trade 40 lots at one time. Here you can see overnight we just have 5 lots. $100,000 portfolio. Maintenance margin probably of about $15,000 to $20,000 or so, and margin required to hold these positions. And of course, the day trade margin is much less. System 1.0 EMD up $1,500. Swing system 5.0 $2,000. MRSEM there you see up $1,500. Just yesterday alone led to an impressive 10% gain for one of our most diversified portfolios. There's a Delta DTS that we often mention, up $2,107 yesterday for the Tuesday. How did that translate into the gains? Well, there you see a 2-day, and that's a 100-day. So we're going to try and move over and squeeze that right there. 2-day return for the Matte Black, 16%. Actually I take that back. Delta B was leading 19%. Venerable Map DT up 16%. This is just in 2 days. But the cash winner certainly was the Matte Black with a $16,000 haul over the last 2 days. Pretty impressive stuff. There's the performance yesterday of the said portfolios, the primary portfolios that we track. MSA UDT up 12%. Delta DTS up 14%, and MAP DT up 14%. MAP DT is closed, but you can get involved now in the Delta DTS if you are so interested. Here's the actual Monday's performance of the portfolios. QTrader's up 4%. Delta B's been doing pretty nice for a swing. Delta B, these deltas are closed, save the Delta DTS, and I believe maybe even the Delta DT are open. So if you have any interest in these portfolios, and definitely feel like we're leaving something out. If you have any interest in these portfolios, you can, there we go. That was just the performance of yesterday, or the 2-day. We just went over that. That's what we're leaving out. If you have any interest in these portfolios, auto trading is very simple, and it's really the way to go. You don't want to be sitting in front of a computer. You don't want to be tethered to your cell phone, i.e., ergo your broker, to get email alerts. You need to buy the market now, sell the market now. Here, go call your broker. Or certainly be tethered to your computer screen. Oh, I got a trade. I need to go make the trade. You really need to leave it to the professionals. We've been doing this almost a decade, actually. Certainly, I've been in the markets since '98, so about 13 years or so. Been with the MiniAnalyst.com for about 8. And it's definitely the way to go to auto trade, and that way all you have to do is have an account with one of the key brokers that we work with, the nation's top futures brokers. Online application is simple. Just click the link in your welcome letter. It takes about 5 or 10 minutes, and then the broker will contact you with any funding requirements or what have you. If you don't already have an account, you probably already have an account with one of the brokers that we work with. And there you go. The broker handles everything. They set up your account. They hook up all the systems. They oversee the account management in case anything were to go wrong. But honestly, we began using our software probably about 5 or 6 years ago. Maybe in the first year there were technical difficulties, but it just really, knock on wood, runs so smoothly. We almost never have any problems. In fact, in a few years we haven't had any problems. But the broker is there just in case. What's more, you can actually trade for, instead of $10 a round turn, you can actually trade for $7. Now, you do have to subscribe to a year of a portfolio to get that special rate, but $7 a round turn, that's like $4.50 commission. You have the $1.50 a round turn automation fee, which goes to the software. We don't have anything to do with that. Certainly we, MiniAnalyst.com, don't have anything to do with the $7. But $4.50 commission, and then just $1 for the account management fee, and that's to make sure the broker, or that's for the broker to be sitting at his computer or her, sitting at their computer, monitoring. If they have any problems, they're right there, and that's just $1 a round turn. Of course, most of our systems really only trade about 10 to 12 times a month. So it's really not that many trades going through. We do offer multiple systems. Having said that, so just set up your account. Broker handles everything. You get $7 a round turn instead of 10, or I guess it's $9.50 if you subscribe. But you do have to subscribe to a year to get that rate. Instead of $9.50, you subscribe to a year. So here's what you do. So let's say you're interested in the MSA UDT. You go to the website, MiniAnalyst.com. You click on MSA UDT right there, or the Delta DTS. You add that to cart. That's 3 months for $588. That's like $20 a month per system, per lot, or something like that. It's something ridiculous. Here's what's interesting. You purchase 2 quarters, and you get an entire year for free, and you get the lower rate. You purchase just 2 quarters. You don't even need a promo code. Let's say you want to do the Delta DTS 10K, MSA UDT 10K, although this is usually 15K. $20,000, you do both these for a year. $2,700, you save $2,752 on the yearly contract, and you save 25% nearly on commissions as well. So just a great opportunity. If you have any questions, go to the website, chat with Support Team Live. If you have any questions about your portfolios, click on Ask an Analyst, or hope you enjoyed the video, and I guess we will see you next time.